The most challenging thing is to be sure that you're aware of your requirements and then have somebody that you can fall back on to handle those requirements so that you can focus on what you're best at, which is trading. So if you're not good at accounting, you need to seek out accounting help. You need to get somebody that can focus on that for you. You need to have somebody that can help you put together your performance records and figure out what your management fees are going to be and your incentive fees are going to be. And you also need to find out what your day-to-day responsibilities are for your regulatory issues, as far as checking your trade statements, making sure that you take something as simple as ethics training once a year, or filing the right reports or notices with NFA. I'd say the biggest concern, though, for me and for the other people that I work with and interact with on a daily basis for a CTA, is that on the fund side, the private advisor exemption has been removed. And there's a lot of anticipation that that may happen on the CTA side as well, even though that hasn't been proposed. So that's not officially on the books, but it's something that could happen. And under that situation, anybody managing 15 accounts or less may have to register, which would be the first time that's happened for, basically the current history of CTA trading. So it could be a big change for a lot of people that have relied on that exemption. And again, it's just one of those moving parts that you have to stay on top of and focus on. But for the time being, it shouldn't be too much of a challenge for current CTAs. As a CTA or somebody that wants to manage money, it's a must that you get registered. You have to pass the Series 3 and the Series 34 to be able to manage Forex money. And some of the challenges there are just adopting to the futures rules that are now being applied to your business. The biggest challenges we see with new CTAs or Forex traders is that they don't really have a handle on the record-keeping requirements of, say, what their account documentation needs to be. Generally, FCMs or FDMs in this space have all of this information online, and a lot of times don't share it with CTAs. But it's important to have. It's important to know who your customers are, and it's important to be able to share that with NFA during an exam. Also, in this space, people have a really hard time developing their track records because without a standardized exchange, many of these firms over the last 5 years, which is the record-keeping requirement period for performance, have had different standards. They have different reports. They have different methodologies of how they report positions to people. And compiling that in a consistent manner with what CFTC requirements are can be very challenging and very daunting. Really what we try to do is find that niche market that you're good at as a trader. Be sure that you have an ally, that you have somebody in the industry that can work with you and can support you. And sometimes that's hiring a professional marketing firm, and other times that's working with an established IB or working with an FCM that has capital channels or different avenues to capital. And working with those people can really help you to boost your assets under management and can help you to become what you want to become, which is a growing firm that's increasing its assets and developing a solid track record so that you can go after the larger, more institutional money at some point down the road. I'd say the CTA space and the managed futures space is the fastest growing investment area in derivatives or commodity futures. Primarily at this point, because of the recession that's been ongoing since 2007, 2008, people are afraid of equities and they're looking for an opportunity to invest in products that can make money in uptrends and downtrends in a fairly cost-effective way. So with Bernie Madoff, with all of the different regulatory things coming downhill with Dodd-Frank and just the uncertainty of some of the proposed rules that are in the pipeline, the managed futures space has really benefited well, and that's our fastest growing client class. So getting involved now, getting ahead of the curve, I think can be very beneficial to traders that are looking to make their mark and develop themselves as the next big thing. And the CTA space is really a great place to go with some of its features, where the money is segregated at an FCM. You don't have to deal with the fund accounting that is cumbersome and somewhat expensive and challenging at the fund level. Some of the regulatory requirements are much less in the CTA space. And ultimately, I think there's a transparency that individual accounts and managed futures offer that people are really interested and excited about. So I'd say that this space is one to really look out for in the future, and it's certainly something that we're putting our money on as being a growing industry and a place where we look to help traders that want to become the next big thing.